Good morning. This is Larry McMillan with the stock market update on Monday, December 1st. So in the last week, the S&P completely traversed its trading range. It was traded as low as 6,500 on Friday, November 21st, and by the close on Friday, November 28th, it had almost gotten all the way back to 6,900. So that's the trading range. We're seeing a little profit taking this morning. It's typical near the top of a trading range, but there has been some improvement in the indicators. So let's go over them. Well, just first of all, if we broke out over 6,900, that would be very bullish. But in any case, looking at the indicators, the put-call ratios are still on sell signals. They're still rising. That's the equity-only put-call ratio. That may or may not last. Some pretty big numbers are going to start coming off of that ratio. So if it rolls over and starts to decline, that would be bullish. But right now, it's still on a sell signal. Breadth has really improved, so much so that a rare indicator called the breadth thrust buy signal, invented by Marty Zweig years ago, has given a buy signal. It measures when breadth has gone from a negative state to a very positive state in a very short period of time. It doesn't happen too often, but it's happening now. So that's a very, positive indicator. Also, new highs have numbered more than 100 for the last 3 days in a row, so that indicator is back on the bullish side. I realize it's flopping back and forth, which is unusual. Typically, you're not going to have 100 New York Stock Exchange stocks near their new highs, while at the same time 100 near their new lows. But that's been happening recently, so we're just living with it, I guess. We're not going to change the indicator just because it's oscillating a bit. Realized volatility is still pretty high. That wasn't, it didn't decline at all because the market rally was so sharp and the previous decline was so sharp. So what we call HV20, the 20-day historical volatility of the S&P 500, is still around 15%. That's relatively high, and therefore a bit of a danger sign for stocks. Implied volatility, on the other hand, VIX has improved a lot. VIX fell from a very high level, almost 29 a week ago, to now it's below 17 again. There's a VIX spike peak buy signal in place because of that. And if VIX stays down here for another few days, we could get a trend of VIX buy signal as well. So those are buy signals for the stock market, not for VIX. And then finally, the construct of volatility derivatives is positive again. As well, the term structures are sloping upwards. On top of all of that, we're entering a seasonally bullish period. The week after Thanksgiving is typically quite bullish, which then leads into what we used to call the January effect, but that takes place in December, and then the Santa Claus rally. So these are all positive seasonal patterns that hold into the new year. So any bearish trends would have to be fighting that. So in summary, the market is still in a trading range, and there is some profit taking near the top of that range, which is to be expected. But if we break out over 6,900, then we'd have a very bullish scenario heading into the end of the year. So we are trading positions in line with the various indicators and the seasonals, and we'll keep an eye on these as we go forward. If you're interested in keeping up with these things on a daily basis, please visit our website. We're having some Black Friday specials right now, and you might find that interesting. Meanwhile, have a great week trading.